So that's recording. Guys, a big warm welcome to this training session, Forex Basics. And this whole session came about after a discussion in the office, and it was made quite clear that over the last few months, we've had a tidal wave of new starters. And, most people join, for the copy, paste and profit, which is absolutely fantastic. It's a great service, but I do believe that it's key that you do understand the basics. So those of you that have come on, a big well done, because it shows that you are willing to develop your knowledge a little bit further. And that being said, a big plug for IML Academy is absolutely fantastic. And we do say that everybody should go through the basics in the academy. So without further ado, I believe that everybody knows who I am. However, just a brief introduction. My name is Des Ame, for those of you that don't know me, which is quite possible because the team is quite big now. We have a team of 260. So some of you I've not met yet. I've not had the pleasure. I'm the director of Ame Finance Academy, based here at 1 Canada Square, the main Canary Wharf building. I'm a former assistant head teacher, now a finance broker. And I'm here to give you the basics in trading so that you understand the fundamentals. I know some of you on here that are already part of the academy, and I'm assuming that this is going to act as a refresher, and that's absolutely fantastic. But please bear in mind that I am just going through the basics, the absolute bare bones. My target audience are people that have come on, they've been copying and pasting, and they're not really sure, what trading is about, or they're not really sure what's going on behind the trades. Okay, so without further ado, we're going to go straight in. Okay, Forex trading, the basics. I do recommend that you take notes. I'm more than happy to share this presentation out afterwards, no problem at all. But there's something about taking notes. I say note takers are the money makers, but more importantly, from my teaching background, students that always made notes were the ones that were able to remember more. There's something about when you write notes, it goes deeper into your memory. So please do take a moment to grab a pen and paper, or if you're making notes on your device. I just noticed somebody put their ear to the device. Am I speaking loud enough, everyone? Can someone just put something in the chat box if the level of my voice is okay? Perfect. Okay, cool. Okay, brilliant. I'll try and talk a little bit louder, loud and clear. Brilliant. Thank you. All right, guys, so we're going to go straight in. Okay, first of all, if you was to boil Forex down into, if somebody was to ask you what is Forex, in a nutshell, it is the buying and selling of currency. It really is just as simple as that. So as you can see on the screen there, I have two currency pairs. I have the euro and I have the USD, the United States dollar. Okay. And you can see there that you can either buy the euro against the dollar, or you can sell the euro against the dollar. That is it. That is Forex in a nutshell. All we're doing is buying and we are selling. Now I'm going to unpick that a little bit more as we go through. So just bear with me. Okay, so Forex is just an abbreviation for foreign exchange. I'm sure that we all know that already. And it doesn't matter if it's an individual, a bank, a government, a corporation, a tourist, in Hawaii, it's simply the exchange of one currency for another. When that happens, a Forex trade takes place. And all Forex exchanges involve two currencies. The quote, we call it a quote, will always involve two currencies. Of course, you can have gold as well, and you can trade commodities, other commodities, and you can also trade cryptocurrencies. Guys, you can actually trade cotton, and all kinds of things, chocolate, and so forth. In every instance, one currency is being bought, and simultaneously at the same time, another currency is being sold. It happens at the same time, okay? And this happens in pairs. So, Forex, as you probably know from your introduction presentation, we know that Forex is a massive industry. It's a $5.3 trillion industry. And what I've tried to demonstrate on this slide is just how big it is. Just have a look at that money bag compared to the little one. 5.3 trillion per day. It's the biggest and the most liquid market in the whole entire world. Just to put it into context, if I was to give you £1 for every second that went by, it will take me 30 years to give you 1 trillion. And what we're doing is teaching you how to get a slice of that every single day. So let's just explore some of the advantages of trading real quick. Okay, first of all, there is very little and sometimes no commission, depending on what broker you use. There are no fixed lot size. Okay, we'll talk about lot sizes in more detail as we go along, but you know, it's not fixed how much you can trade per pip. And any technical terms that I'm using, just know that I'm going to uncover that as we go through this presentation. Remember, we're going through the basics. You can start an account, a real live account, with as little as $25, okay, although it's not recommended. We recommend that you start with something around sort of 100 to 200 pounds. You know, that's enough to kind of make a decent return, okay? But you can, some brokers do actually allow deposits that low, okay? Low transaction costs, we call that the spread, the bid and the ask. Again, I'm going to be going through that in a lot more detail. I'm also going to be showing you a chart as well. Of course, the markets are closed at the moment. They reopen at 10, but I'm going to show you a chart as it is, and we'll look at some of the elements of a chart as well. It's a 24-hour market. I'll explain why it's a 24-hour market when we look at the different sessions. It's open 5 days a week, 24 hours. Leverage, okay? The fact that we have leverage, what that means is that with a small amount of money, we can actually go to the market with a big, large sum, okay? So if you've only got £100 in your account, if you're using a broker, for example, IC Markets, they give you leverage of 1 to 500. So for every £1, they will times it by 500. So with £100 in your account, you now have 50,000 to come to the market with. That's a major advantage. It's because of leverage. That's why we have so many people making large amounts of money from this industry. High liquidity, we've covered that already. And you can get in and out of trade at any time. Okay, you can always cancel a trade and close a trade. And some of these advantages we already know. Minimum time commitment. Okay, you don't need an office, employees, or inventory. You can trade on a beach in Hawaii. Any background, we have traders from all types of backgrounds. All types of backgrounds. I'm just looking through the list now. I can see here we've got, you know, people from, you know, we've got window cleaners, we have school teachers, we have doctors, we have aunties, we have uncles, we have all types of people from all different backgrounds. I will be glancing over to the chat box from time to time just to make sure that all is well. Recession proof, it doesn't matter if the market goes up or whether it goes down, we can make money as long as we are going the right way. It is tax-free, as we know. So the market hierarchy, who are the big players in this market? Okay, guys, it probably goes without saying, the people that the group of people that set the pace for the market are the big major banks. Just opposite me, I've got the big Barclays Tower, the big HSBC Tower. Okay, these are examples of the big guys in the market. They kind of determine and they set the pace for the market. When they trade, they can move the whole market. You know, that's why you often hear people say that, you know, you can't beat the banks, or it's good to trade with the banks. That's because they move the market. They're the biggest players. And then we have large commercial companies. Big companies, what they do, not only do they trade, but more importantly, because of the big, large transactions that they do, they're constantly exchanging currencies back and forth because they're buying things internationally all the time. So they have to exchange currencies. So they have a massive impact on the market. And then we have governments who, just like the large commercial companies, they are always moving the currencies constantly. Okay, big governments are doing this all the time. Governments trade, you know, they like to multiply their money like everyone else. They want a slice of this industry like everybody else. And then we have central banks. Like here we have the Bank of England. Okay, each country has a central bank. We have the Bank of England, and they obviously are in charge of interest rates. They control inflation, and this affects the Forex market, especially when they have big news releases. Okay, they can affect the market quite drastically. And then you have the last group of people, which is you and I. You know, we're called retail traders or speculators or spot market retail traders. Okay, we make up a very small percentage of trades each day. And when I say we, I'm talking about all of the retail traders around the world. We are very small compared to the other players that I've just mentioned. If there are any pertinent burning questions, please do put them in the chat box. I am checking it from time to time. Okay, so what are the major trading sessions? You heard me say earlier that it's a 24-hour, 5 days a week market. Okay, and this is why. It's because we have 4 major trading sessions. 4 major trading sessions. So when one market closes, another one opens. So just take some time to have a look at this screen. You can see that we start with Sydney. Okay, they're going to be opening up very soon. Okay, when some countries change their time, you know, like we've just changed our time, we're now in summertime. So this, you know, just be aware of that. You know, some countries do change their times, but in the main, generally speaking, this is what you're looking at for major sessions. So you can see here, we're here at the moment. What's the time now? We're around here where my cursor is. Okay, approaching 9 o'clock. We're here. So we're expecting the Sydney market to open, give or take, depending on time zone. Okay, so they open up. So the markets will open up later on this evening, and you can see here that will go right through. And then you can see there's a bit of an overlap with the Tokyo session opening up at 11, and then it kind of carries through. And of course, the Tokyo market finishes 8 a.m. in the morning. Okay, so you can see here, you've got the Sydney market, you've got the Tokyo market, and then we have the London market. Guys, there's a reason why I've emphasized the London market, and it's not because I'm sitting in London. It is because the London market is the most liquid market in the whole entire world. Lavinia, I've seen your message. Can you run through leverage maybe at the end again? Absolutely. If I forget, just remind me. No problem at all. Guys, it's the most liquid. It only really dawned on me how big the London market was when I went to Miami for the IML convention, and when I went to Vegas for the next convention. The Americans, they stay up late. Their time, they're on EST and PST, wherever they're on, and they stay up late just to catch the London session, especially the early part. You know, they really value it. There's a lot of people whose routine, their whole daily routine is based on the London session. And you will know, for those of you that catch bod pips and, you know, and so forth, they stay up late. It's the most liquid market out of all the sessions, okay? Closely followed by the New York session. And you can see here, the New York session for us opens at 1 p.m. So what I want to highlight is this overlap. Where my cursor is, there's an overlap. You know, there's 1, 2, 3, 4, 5 hours of the day where the New York session overlaps the London session. So I'm sure it goes without saying that this is the most busiest time. This is when the most trades are taking place. Very, very busy, very liquid. You know, the markets are going to be very active at these times. So you can see the very last row here, I've got the best trading time. So you got that very early in the morning in London, okay? That crossover of Tokyo, that's quite a busy time. Those of you that do London daybreak, anyone still doing London daybreak, put a 1 in the chat box. London daybreak. London daybreak is a very useful strategy to get your teeth into. If you do have an opportunity to trial it, it's good. It's not too bad. But those of you that do London daybreak will know, yeah, Dennis is still doing London daybreak. That's a very busy time, 8 a.m. Okay, but then after that, you can see it's that overlap. It's the overlap between the London and New York session. Okay, so moving on. Dennis, you're the only one still doing London daybreak. I'm sure there's other guys that are not on this session, of course. Okay, right. So even though London is the most liquid market, the most popular currency is the United States dollar. So almost every currency in the world is traded. Even the Nigerian naira, okay, is traded. Not very often, okay, but it can be traded. I'm just using that as an extreme example. But of course, some currencies are more popular than others. So you can see here, okay, that we have 7 of the most popular pairs on the screen here. Euro USD, Euro JPY, GBP USD, AUD USD, USD CHF, New Zealand dollar USD, USD CAD. These are known as the majors. And you will notice something about the majors, and that's that they all have USD. USD is very popular, but those currencies are the majors. those of you that put your symbols on the front of your on your phone under quotes, they should all be there because they're traded the most. So these are known as the majors, and then we have another group called the minors. So for example, the GBP, Great British Pound, against the Euro, you know, you'd think that'd be quite a popular currency pair, right? But that's known as a minor. If it's not one of those 7 pairs, then it is known as a minor. And then after the minors, we have the exotics. We have the exotics, you know, like the Naira, you know, any other, you know, there's some of these obscure, not obscure countries, but, you know, some of these countries that don't have big financial markets, you know, currencies are not traded that often. They are known as exotic pairs, okay? So just a quick summary there. As you can see on the board, I won't talk too much about that, but you can see the most popular currencies there. You got the euro, you've got the United States dollar, the Canadian dollar, the Great British Pound, the sterling, the Australian dollar, New Zealand dollar. I know, Brian, I know you like the Australian dollar. That's your favorite one there. New Zealand dollar, the Swiss franc, and the Japanese yen. Okay, right, guys. So let's have a look at this. Okay, now let's get into the nitty gritty. I want us to really uncover the real bare bones of this. So reading a quote, let's understand, because a lot of you have been copying and pasting, which is great. That's what we encourage you to do because it's a good way to make money. But now we're really starting to understand this. Okay, so let's have a look at this quote that you can see on the board. You can see here we've got the Great British Pound against the US dollar. So you can see the very first part of any quote, the first 3 letters, is what we call the base currency. It's the base currency. And it's being quoted against the, well, it's up against the quote currency. So the base currency, the value is always 1. The value is always 1. So what we are saying is that for every 1 Great British Pound, we can buy US dollar worth 1.51258. And I'm going to break down what that number means further on in this presentation. So don't get too hung up over that. I'm going to break down, when we start talking about pips, I'm going to break that down for you so it's real nice and clear. That's the objective for today, to make this session nice and clear. Okay, so we've got the base currency and the quote currency. £1 buys me $1.51258. Okay, it's not 1 for 1. I'm getting a little bit more for my dollar. I'm getting just over 1.5 worth of a dollar. So we've got the base and we've got the quote. Okay, every time I move on from a slide, I always glance at the chat box just in case there are any questions, but I'm hoping that's nice and clear. £1 for every dollar, and you can see the quote price there. So let's have a look at a candle. And remember, I'm going to show you a chart. You know, hopefully the charts may open soon if the time is all right. Because of the recent time change, I'm hoping that the markets may open at 9, but it could be 10. So let's have a look at this candle. Now, the candlesticks was the history of the candlesticks. It derived from Japan, from rice sellers. Rice sellers developed this whole way of measuring using candlesticks. Now, all we need to understand, okay, we don't need to understand about rice or rice sellers or even Japan. What we need to understand is, how is this candle made up? So you can see here, let's just stick with this green candle. We normally call this the bullish candle. It's bullish. And the reason why is because when bulls fight, they normally raise their nose. They normally fight upwards. I'm kind of doing the motion now, making a fool of myself, but they normally fight like this. Okay, the bulls fight with their nose up in the air. They fight up. Those of you that watch you know, the matadors, what they call it, the bullfighting, you know, they normally grab their matador and fling them up in the air. That's why it's called a bullish candle, because if it's green, it means that the momentum is going up. So all you need to know is the following. Okay, and for some of you, you've probably never seen a candle before. It's just dawned on me, because for some of you, you're probably so used to copying and pasting from the Signals app that you've probably never seen a chart before. And that's absolutely fine. You know, you've probably made so much money by doing that, and that's fine. But for some of you, you may want to take your learning one step further to understand this so you can start trading for yourself. So here we have where my cursor is, where it says open, all bullish candles, okay? So a candle tells you the history of price in that time zone, okay? And so I want you to understand that when I go into the chart, that you can open a chart in different times and different time frames, shall I say, in different time frames. So it can be a 5-minute time frame, a 15-minute time frame, a 30-minute time frame, a 1-hour time frame, a 4-hour time frame, a 1-day time frame, a 1 week, and it carries on 1 month and so forth. So the candle tells you what has happened to price in that time frame. So if we're looking at a 1-hour chart, which is probably one of the most popular charts, in a 1-hour chart, what each candle is telling me what happened to price in that 1-hour time frame. So I will know where price opened, where price closed for the hour. So it opened here for the hour, it closed here after the hour was finished, but at some point during the hour it reached a low of here and it reached a high of here. So we have where it opened, where it closed, the highest point in the market it reached in that hour, and the lowest point it reached in the hour. Okay, Brian is put in the chat box that we have the Candlestick Bible for anyone that wants it. This is revolutionary. You know, some of you are beginners and you may just want to take some time before you read such a document, but that document will, if you're serious, it will change your whole it will change everything that you know about candles. It will make you such an experienced trader. I know it done wonders for Travis's trading journey, as it did for Brian's and other people that have used it. So let's look at this bearish candle. And a bear, it's called bearish because bears, as I'm sure you probably guessed, when they fight down. Okay, so it's bearish. If you hear a terminology like the market's looking bearish today, it means that, you know, a particular currency pair is dropping. So we can see here when it comes to open and close, it's the opposite. So it opens here. So we know that for that 1 hour, I'm using 1 hour as an example, it opened here where my cursor is. Okay, but at the end of the hour, it closed here. But at some point, it reached all the way here. That was the lowest point that price reached in that hour. And this is the highest point that price reached in that hour. Let me know if that explanation is okay, if we're ready to move on. Someone just drop a 1 in the chat box if that was clear. If not, I'm happy to stay on that screen. Okay, that's a brief whistle stop on candles, but of course we've got the Candlestick Bible as well. Okay, everyone getting some 1s there, so that's fine. Okay, open, close, the highest point, the lowest point of the candle. Okay, moving on. Here's a chart. Okay, I'll show you my open chart in a second. Okay, but you can just to get you a feel. So we can see here. Okay, so where my cursor is, we call this a doji. This is a doji, and that's because you can see here that it opened and closed roughly, okay, in the same place. It's a really thin line. The body, when the body is really small, we call that a doji. Okay, when you read the Candlestick Bible, you're going to hear all kinds of fancy names like hammer, double top. There's all kinds of fancy names I won't go through now because we're just at the beginner stage. Okay, but let me just highlight. Okay, so where my cursor is here, see a price opened here. It did all kinds of things, you know, in that 1 hour. If this was a 1 hour chart, it could have been up and down, you know. Forex is very liquid and quite volatile. But it's done all kinds of things. It's reached all the way down here. It's gone all the way up here, but it's closed, you know. It's closed roughly the same point that it opened. Okay, so that's what a chart looks like. And what technical people do that analyze charts, they're using the candles, they're using the history of the candles to predict what price is going to do next. Okay, so for example, if you have a look where my cursor is now, you can see that price has gone up, and it's gone here, right here. So at this point, someone who's analyzing this, they could say, you know what, this is the highest point that price has reached for a long time. We don't have the big picture, I'm speculating, So they may at this point decide that, you know what, I'm going to sell this currency pair or this currency because it's quite high. And they may be using other indicators, you know, like RSI and so forth. And they may know that the market's going to drop. So they're using the candles to know what's going to happen next. Okay. And then they're going to sell here, and look, price did actually drop. Okay, moving on. What makes price move? It's quite simple. Okay. Price reacts to imbalance, but I prefer to use the term that it's all about supply and demand. Okay. It's all about supply and demand. Okay. And momentum. So if lots of people are buying the pound, then of course the pound is going to shoot up. Okay. It's gaining momentum. Lots of people are buying it. It's popular, but it's also reacting to things around the world as well. News, for example. Okay. Price reacts. So people are reacting to news. So supply and demand. Okay. We already know that who the big players are, the governments, the big banks. Okay. They move the market. But effectively, price is reacting to supply and demand. As more people are buying, it's pushing the price up. People are selling, it's pushing it down. It's just supply and demand. And what's making people decide whether to buy or sell can be a combination of different factors. It could be technical analysis, how people have analyzed the market. It could be news. It could be people following a trend. Okay, but the main players in the market, they're controlling the market, and the supply and demand is determining whether price moves up or whether price moves down. So I want us to just delve into this because I know this has caught a lot of people off guard. Okay, bid and ask. Okay, and I know for some people this is probably the first time that you're seeing such a thing. So I want to just break this down and simplify it so it's just very clear and very simple. So the bid price is whenever you open a chart, you will see whenever you open your Metatrader, you will see that there's normally a bid price and an ask price. So the bid price is what your broker is prepared to buy the currency at. So they're going to buy it at one price, the bid, but they're going to sell it to you at a completely different price. Now, what we want is we want those two prices to be quite similar, you know, because if they're buying it for one price and selling it for another, I'm sure you've worked out that the difference is what we're paying them. And we call that a spread. So the difference between the bid and the ask is the spread. And that is why whenever you go into a trade, normally you start off in negative. And some of you probably panic, like, why is it negative? Why is it negative? Why is it red? It's because the first part of your trade, you've paid the spread. So you're having to climb a little hill so that you can break even. You know, brokers don't work for free. They have to eat, they have to make their money, and they primarily make their money through the spread. Some charge a commission as well, but most don't. You know, I don't pay a commission. I just pay the spread. So if it's a very popular trade, like, you know, like the pound USD, so GBP USD, sometimes referred to as the cable, because back in the day, this was done through a cable that went under the Atlantic, but we digress. Popular trades, you know, tend to have a very low spread. The reason why is because it's popular, the broker knows that it can do the exchange quite easily. Because what you have to understand is that when you place an order, say you're buying the pound against the dollar, your broker has to find someone who's doing the opposite. That's why we call it a foreign exchange. You're exchanging. So the broker has to find someone who's doing the opposite. So if they're going to struggle to find someone who's doing the opposite of what you're doing, then the spread is going to be bigger. Spread's going to be bigger. So if a spread widens, then it's probably because there are not many, you know, there are not many market participants at the time. So it's tough for them to get a buyer. So, you know, the spread widens. But very popular trades tend to have a very small spread. So again, a spread is the difference between the bid and the ask. Your broker pays for the currency at one price and then sells it to you at a different price to make some money. But a good broker, so when you're choosing a broker, you want one that has very small, tight spreads. The tighter, the better. Sometimes it's so tight you can't even see it. If you're using IC markets and you're using true ECN, then you probably pay a little commission, but your spreads are probably 0.0 for some of the currency pairs. Okay, any questions on that? Everyone happy to move on? Just give me a 2 if you're happy to move on from that, guys. Brilliant, brilliant, brilliant. Excellent stuff. We're cooking on gas. So when do we buy and when do we sell? When do we buy and when do we sell? Let's have a look at this chart here. I'm going to try and make this a bit more interactive now. So I'm going to bring in, who am I bringing in? I hope no one's hearts are pumping extra loud. I'm going to bring in a young guy who's been, I've been watching his trades from afar through his mentor, and he's been doing really, really well. I've not spoken to him before. I'm hoping that he's free to talk. Joe, can you hear me?
Yes, what's happening, mate? You all right?
Not too bad, Joe. Not too bad. I've been seeing some of your trades. Absolutely fantastic.
Good to hear. Good to hear.
Okay, so just looking at this chart here, where would you say that it is expensive to buy this currency pair?
Well, it's expensive.
Yeah. Where would it be really?
So, left-hand side, top.
Yeah. Just where my cursor is.
Yeah, that's it.
Yeah, absolutely, absolutely. Thank you so much. Appreciate that. Okay, so where my cursor is, so prices at a very high point here. So it'd be very expensive to buy it here, you know. And obviously, history has shown that it did indeed drop. You know, so it's quite so. Conversely, you know, it'd be very cheap to buy the currency here. It's dropped all the way down here, so it's a good time to buy. A very good time to buy. But sometimes we need to see the bigger picture. We need to see the bigger picture. So if I go to the next slide, you can see that when I open it up, you know, so what some people do, good traders, what they do when they're analyzing a trade, they start off on a higher time frame and then they work their way down. I know some traders that do it the other way, you know, but I do firmly believe in starting high and working their way down. So starting off on, say, you know, a daily chart and working their way all the way down to like a 15-minute chart. So you can do it the other way as well. I know traders that do it either way, you know, but looking at multiple time frames is good practice. So you can see here that when I'm looking at this now, the bigger picture, okay, in actual fact, you know, and it was obviously a trick question, you know, right here where I said that it was low, actually it's a bit of a high. Okay, so always kind of get the bigger picture. Don't just look at one time frame, look at multiple time frames. Okay, and just get a big feel for where price is at, because on a smaller time frame it could well be at a low, but when you look at the week, it gives you a different picture. So let's have just a quick break there. I'm just going to bring in a chart. I'm just going to bring in my IC markets. Okay, so it's just gone 9 o'clock. So let's just have a look. Okay, right. So that market. One thing I should have said as well is that the Asian market, you know, apart from the New York market and the London market, very liquid and very fast, but the other two markets, they're quite slow. You know, they tend not to be as liquid. You know, there's not many players in the market. So whenever you're watching a chart like that involves the Australian dollar, New Zealand dollar, or that session, anything in that session, markets are very, very, very slow. So you can see here, this is Metatrader 4. I've opened Metatrader 4 via my broker, and I highly recommend that you do the same. Okay, that you open Metatrader, you download it via your broker. It just makes things a lot tighter in terms of your entries and so forth. Okay, it's very good practice to do that. So you can see here the bid and the ask where my cursor is, what I explained earlier. Here you can see my account from I've got 2 accounts there, and at the bottom here would be where your trades are. Okay, so if you have, I don't have any open trades at the moment, but if I had any open trades, they would be here. And you know, for those of you that so I do 2 types of trades. I do my fundamental trading on this account, and then I do my trading that I do with the copy and paste trading. I do on another account. So it's also good practice to maybe have 2 accounts. So I'm just switching over to my other account now. And it's good practice to have to keep your account separate if you're doing two different types of trading. Okay. But at the same time, there's absolutely nothing wrong with having, you know, just one that's doing everything. So sometimes it is good to just kind of keep that separate. To place a trade now. I wish I was doing that. Okay, to place a trade, you just click here on new order. Okay, so, right, so I've just switched over to the other account. So just by double clicking on each account, it will literally just switch to the relevant account. So to place a trade, you just click on new order. Right, so new order. So if I was doing one of the copy and paste trades, I'd click on new order, and you can see this little box here. And you'd put your stop loss in, your take profit. I like to leave a comment, you know, so I'd probably put something like, you know, Luke long my gold trade. You know, that's a lot of you. It was only the other day I was speaking to Tia, and she's one of our experienced traders, and she just discovered Metatrader on a computer for the first time because she's so used to using her phone. And guys, trust me, I know how convenient it is to use your phone. But Metatrader 4 on the computer is mind-blowing. Like the things that you can do, you know, trailing stop loss, beautiful, you know. So at some point, it's definitely worth exploring this, okay? And you can see it looks slightly different to the phone as well, but do get used to this, do play around with it. Okay, I'm gonna go back to the presentation, current slide. Okay, so profit versus loss. You want to aim for a rough ratio of kind of 3 wins and 1 loss, you know, but that depends on a number of factors like what your stop loss is and what your take profit is, you know, but that's just kind of a rough estimation. So let's have a look at entry, stop loss, and take profit real quick. So this is a buy setup. This is a buy setup. So here you can see that where the green line is, that's my entry. And then I want price to go up. When we're buying a currency, when we buy the Great British Pound against the dollar, what we're saying when we buy a currency, we're saying to the market, I want to buy this currency, and I believe that the price is going to go high because we're buying, we want it to go high. And then when we close the trade, we're selling that currency back to the market. So when you're buying, you want it to go high. And when you sell a currency, you want it to drop. You want it to drop. It's quite bizarre that you can sell a currency that you don't have, but that's the power of digital currency trading. Beautiful. So here you can see where my green line is. I want price. I've entered here. I want price to travel all the way here where the purple line is. That's my take profit. I want it to come here, and then as soon as it hits that line, it's going to take me out the trade, and I'm going to have my money sitting in my account. But we use risk management. So we use a stop loss. Stop loss. So if it goes the other way, it's going to tap me out. That's good risk management. Because look here, I'm trying to win way more than I'm losing here. So that's another thing in terms of risk management. It's always good to even have a 1 to 3 risk to reward scenario as well. So for example, I may risk, you know, I'm prepared to lose 50 pips, but I'm going to gain 150 pips. That way, if one of my wins does come in, if one of my wins comes in, it's triple what I was prepared to lose. So if I do take an L, if I take a loss, okay, I can even have 2 L's, because that one win, which is triple, is going to enable me to cover those losses. So that's why you want to have a 3-to-1 ratio in terms of what your win risk to reward is going to be. I've just got a little notice here from Lucy B. Is Metatrader 5 the same as Metatrader 4, as my tablet can only download Metatrader 5? Yeah, I mean, Metatrader 5 is meant to be an improvement on Metatrader 4. But what happened was, when they dropped Metatrader 5, all of the experienced traders stuck to Metatrader 4 for some reason. I don't know why. They were kind of, it's not like the iPhone. New iPhone comes out, everyone flocks to it. But when Metatrader 5 came out, it was different. Calculating, yeah, Metatrader 5 is it's the computer version. It's a newer version. By all means, use it. I use Metatrader 4. But by all means, use MetaTrader 5. That's absolutely fine. How do you calculate pips quickly on the chart? Let me just do that real quick for you, Yufi. So I'm just going back to my chart now. So I like to use this. It's a little crosshair where my cursor is. So I've got the crosshair now. Let's have a look at this juicy candle here. This is a nice candle. Very nice candle. I like candles like that. So let's just measure it from, let's say I caught this candle from when it opened. It retraced a little bit, but let's just catch the body of it. So I'm just gonna, so all I'm doing is I'm clicking on the crosshair, clicking at the bottom and dragging it. Now, what time frames? That's on a 50-minute. Be wary. That's on a, look at the top here. These are my time frames. Be wary because on the lower time frames, the candle can look more juicier than it actually is. So let me go to a 1 hour time frame where things are a bit more realistic. So that probably wasn't as juicy as I thought. So let's have a look at this one. On a 1 hour time frame, I'm just going to drag that up. Okay, so that's 20 pips. So can you see? I know it's really small, but that says 205. So we have to put a decimal place in there. So that's actually 20.5 pips. That's 20.5 pips. And if I do this, if I want to look at a move, let's say if I got in here and I caught this move here, okay, that's a 50 pip move. It says 517, but that's a 51 pip move. Has that answered your question, Yufi? I hope it has. But just the crosshair is absolutely fine. Okay, right. So that's a buy setup. So you can see here, I'm going to win a lot more than I'm prepared to lose. And then of course, conversely, we have a sell setup. So I'm getting into the market here, and I want price to fall all the way here. Look how much I'm going to win. Now, I'm not saying that every trader uses this risk to reward, because I'm perfectly aware that some of the trade setups that we post from the professional trader is not quite like this. You know, you have some traders that will have like 100 pip. No, that's an exaggeration. We'll have a 50 pip stop loss, and then take profit one is 20 pips. You know, it goes against what I'm teaching, but at the same time, I'm not saying that doesn't work, because the theory behind that is that price will never go all the way down there. So what they're doing is they're covering themselves by having a large stop loss. You know, some people don't even like stop losses. Some of my colleagues across the hall at One Canada Square, they always boast that they don't use stop losses, you know, because there's lots of theories behind stop losses that I won't go into now. But sometimes having a big stop loss is a good thing, but I do recommend the 3-to-1 ratio. All right, guys, we're getting towards the end now. You'll be pleased to hear. Trend, very quickly on trend. Okay, this is an uptrend. The reason why it's an uptrend is because price is just going up. I know it sounds obvious, okay, but you can see here where my cursor is, price is going up, okay, and you can see where these green lines are, okay. In fact, I'm going to open my chart in a minute. I'm going to ask some of you to help me place some support and resistance on my chart. Support and resistance. So imagine, let's do it now real quick. Let's get a nice chart open. Okay, so it's going to be difficult for me to do actually, because you're not going to be able to help me guide it. Okay, in fact, I know what to do. Let's get someone on the line. Lavinia, Moses, how you doing? How you doing, Moses?
Yeah, I'm good.
Good. Moses, see, I've got this red line here. In fact, this chart's not the greatest. Let me get you a nice chart. I want to give you a nice chart, Moses. I want to do you justice. All right, I'm going to zoom out a little bit. Right, so what I'm going to do now, we're going to create a little line. Just tell me to go up or down. I want you to place this area of area. Are you confident with this, or do you want to choose someone else? Are you okay?
No, just choose someone else for that.
So you're nervous?
Yeah.
All right, okay. Let me get someone who's a bit more expensive. So, okay, Mo. No, I know you're still getting scripts. So that's absolutely fine.
Yeah.
Let's get someone to volunteer in the chat box. Philip, where's Philip? Philip's gonna come offline now. Okay. Yes, Felix said yeah. Okay, where can I? Oh, Philip, here you are. Okay, Felix. How you doing?
Yeah, I'm good, man. How are you?
Not too bad. It was a confident yeah. I like that. Yeah, not even with an H, just yeah. I like that. Okay, right. So I'm moving up. Tell me where you want me to stop, or if you want me to go down.
So what's this for support and resistance? Or-
Yeah. So what do you want to
So
do?
you, it depends. You can go down. I mean, until you reach the peak, up a tiny bit.
Yeah.
And there would be like the midpoint if you're doing both, but you could go up slightly to reach the peak of the.
So here,
the
would you say that's a support or resistance there?
Yeah.
Was that support or resistance?
Oh, so if you went up a bit more, it would become a support.
Support, yeah. So okay, so let's do that, and then now let's put in another line. Okay. So where do we? And where do we to place this one? Up or down?
So if you want to create some resistance, if you go up, that would become resistance there.
Right, brilliant. Thank you. So the best way to think of this, thank you, Felix. Thank you. Appreciate that. Can you zoom out further? Yes, I can. Okay, brilliant. Okay, right. So what we have here, so support and resistance, without going into too much detail, is areas where, price, keeps hitting, and the best analogy that I'm stealing from someone explained it to me is if you think of a bouncy ball, okay, imagine my cursor as a bouncy ball, just bouncing. It's kind of where that price is bouncing. So you've got support, okay, which is the ceiling, and resistance, which is the floor. Support, which is the ceiling, and resistance, which is the floor, okay? And experienced traders, especially technical analysts, they use this to kind of determine what's going to happen next with price, because you can see here that price has kind of been bouncing around here and it's kind of struggling to break here, so if price was to break through here, okay, that would determine what's going to happen next. If it was to break through where my cursor is, it's kind of bouncing around here, and if it was to break through here, that would become a new high. Okay, so just two technical terms: support and resistance. Support and resistance. Okay, the ceiling and the floor. So we've got the ceiling and we've got the floor. Okay, tells us what price has been doing. Okay, where price has been struggling to break through. Okay, and the support and resistance, there's no perfect line, by the way. It is down to interpretation. Where I'll place the line could be slightly different to where somebody else will place the line. So some people like to draw zones. They don't actually have a line. They'll have like a zone, and when it hits that zone or hits that line, it tells the trader what's going to happen next with price. So normally, if it's bouncing through here. If it gets to this line again, so if we had a trade, okay, if we had a trade like this trade here, let's just say the trade was here right now. If it was to come all the way up and hit this ceiling, a technical analyst would say, right, if it's going to come here, history has shown that whenever it comes here, it's kind of bouncing off this line and coming back down again. Okay, now if this was a continuous pattern, so if we had an area here where price constantly just bounced off this line, it just always bounced off this line, always bounced off the line. What it tells us is that price is struggling to break this area, to break through this line for whatever reason. Therefore, if it comes back to this line, a technical analyst would say, right, if it comes back to this line, I'm going to sell. So look what happened here. Look what happened here. It was bouncing on this line and then it got here. Now, somebody would have said, right, okay, I'm going to sell now because it's hit my zone. And then it absolutely bounced off that line and it dropped, So support and resistance, the ceiling and the floor. Moses, I just got nervous. Sorry, bro. No, that's absolutely fine. No worries. Oh, why's my screen doing that? Okay, apologies for my screen. I'm not sure why it's doing that. Let me just try and get rid of that. Okay, right. We carry on. Guys, we're almost finished now. Okay, so in fact, I'm going to stop the share and then share a different screen. So let me just stop the share and then share my screen one. Okay, right. And move that over there. And get the chat box. Okay, can everyone still see? Can everyone see the PowerPoint? Oh. Yeah, okay, brilliant. Everyone can see the PowerPoint. Fantastic. Okay, brilliant. Okay, right. So where did we get up to? Trend. Okay, right. So we had a downward trend. So we had an uptrend. Price is going up. And then you can see a downtrend where price is going down. And you can see those little lines, you know, could be used they're little areas of support and resistance. Areas of support and resistance. Okay. So we've got uptrend, downtrend, and then we've got something called a sideways trend, also known as consolidation. And that's where price doesn't really know what to do. It doesn't know whether to go up. It doesn't know whether to go down. It actually doesn't know what to do. Okay. Periods of consolidation can occur you know, just before a major news drop where everybody's kind of waiting for that major news. So it just kind of, the market is still not really doing anything, you know. So sideways or consolidation is a type of trend. And then we have a trend change. So have a look at this. Got a downward trend and then it changes to an uptrend. We call that a trend change. Okay, what is a pip? Guys, I want us to master this. What is a pip? 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 Let's see if someone wants to come on with a, I'm going to take that off the screen and see if Brogan, let's get Brogan in here. People are getting nervous now. Brogan, how would you describe a pip? How you doing, Brogan? You okay?
Yeah, listen, I don't know if I'm the best person to be asking.
Have a go, Brogan. Have a go. How would you describe a pip? How would you describe a pip?
It's just it's like what you measure, how much you put on.
Yep.
A trade, but like everyone's different. So instead of saying I put £1 on,
yes,
you might put £3 on. So we just call it a pip. It's like a point of
absolutely
measurement thing.
Absolutely.
So it counts how many movements are in the market.
There you go. It's all about the movement, measurement of movement. Excellent. Thank you, Brogan. I really appreciate that. Thank you so much. Absolutely. So a pip, okay, is absolutely, it measures price movement in the market. So whatever the market, if the market is moving up or down, we measure each particular movement as a pip. So let me just get my chart back on the screen. In fact, I don't even need my chart. All we need to know is that every time the market moves up or down, we measure each unit of measurement as a pip. As a pip. As a pip. So those of you that are making notes, I'll let you just write that down. The actual acronym point in percentage, okay, is, it doesn't really do it justice. It doesn't really represent what it does. Point in percentage. What we really need to know is that it's the change of price. It's the unit of measurement. And Brogan was right. A lot of people, they'll say, oh, how much did you make today? They'll say, how much did you make today? And I always say to them, don't worry about how much I made. Ask me how many pips I caught. And you probably hear a lot in the signals group, how many pips were caught, you know? So for example, if we're trading a pound against the dollar and the price goes up 10 pips and we are trading £1 per pip, then we've made £10. If the trade goes up 10 pips and we are doing £10 per pip, then we've made £100 and so forth. I'm sure you can do the math, okay? And that's it in a nutshell. But what I really want us to break down is, let's have a look at this currency here. So 1.2250, okay? So every currency has 4 numbers after the decimal point to make up the pips. So 1.2251 They are the pips. So if it goes from 1.2251 to 1.2252, it's gone up by 1 pip. So Lavinia said, say that again. What part do you want me to say again? Sorry. Was it the explanation of a pip? I'll let you tap that. So let me say that again. So if price was 1.2251, remember 4, the magic number is 4. There are only 4 numbers after the decimal point for every single currency, apart from currencies that have JPY in it. JPY is a funny pair. Let me deal with that separately. But every other currency, there are 4 numbers after the decimal point. Lavinia, do you want to just tell me what bit you want me to say again? And I'll definitely say it again for you. So if it goes from 2251 to 2252, it means that that price has gone up by 1 pip. Now, sometimes, okay, I've seen that question. Sometimes you can have you can have 1 extra digit after that 4th one. And if there's another digit there, we call that a pipette. It's called a pipette. It's called a pipette because there are only 4. There should only be 4 numbers after the decimal point. They are your pips. Those 4 numbers are your pips. If there's a 5th number, that is the pipette. And that's kind of like a smaller unit. So you have to kind of, all those pipettes will equal 1. All of those pipettes will equal 1 pip. So sometimes I just ignore the pipette. I just focus on those 4. It's easier for me to focus on those 4. So if it went from 2251 to 2250, it's gone down by 1 pip. Just think of it as those 4 characters after the decimal point. But if there's another character, it's only a pipette. It can throw people a lot. It can really throw people. But with JPY, if there's a currency that has JPY, then there are only 2 numbers after the decimal place. So look here. Look at the big number at the bottom, Euro JPY. Okay, Euro JPY. So let's have a look. So let's explore these 2 numbers here. Okay, we've got Euro JPY, and you can see after the decimal place, you've got 716. So 71 is the pips. So if it goes to 72, that's 1 pip. If it goes to 73, that's now 2 pips. If it goes to 74, it's now gone up by 3 pips. That last digit, that's 6. That's just a pipette. So if it goes 717, it's just gone up by a pipette. So it hasn't even gone up a full pip yet. It will have to do 10 of those little pipettes before we can do a pip. I hope I'm not confusing you guys. And then underneath it, we've got Great British Pound and the Swiss franc. Now we've gone back to our normal currencies. So let's count after the decimal place. 1, 2, 3, 4. So if it goes to 4015, that's a new pip. That last one is just a pipette. So I'm just going to ignore it. Give me a 3 in the chat box if that's making sense. I'm going to answer your question in a second, Lavinia. Give me a 3. Very okay. Oh, thank you, Joe. I really appreciate that. Oh, excellent. Thanks, guys. Excellent. It's just I just really wanted to ram home that with JPY it's just 2 characters. And with any other currency, it's 4 characters, 4014. They're your pips. So if it goes 4015, then it's gone up a pip. So just Lavinia's question real quick. We are getting towards the end, guys. Thank you for all those 3s, guys. I really appreciate it. No problem at all. So you saying before, you mentioned what pips equals to... Yeah, okay, right. So I always tell beginners, especially when you're on demo. Yeah, if you're on demo, I always say do £1 a pip. Now I'm going to be talking about lot sizes in a second, but I always say do £1 a pip, which is 0.1. £1 a pip. So if you're doing £1 a pip and you catch 10 pips, you've made £10. If you're doing £10 a pip and you catch 10 pips, then you make £100. So times how much you're doing per pip by how many pips you've caught. Or if like me, whenever I'm in a trade, I get excited. So what I do is I look at how many pips I can make. So if it's a signal from Luke Longmire and he's catching 50 pips, then I'll say to myself, right, okay, like I do big lots. I can't lie, I do big lots. So sometimes I'll do like a 10 lot size, which is £100 a pip, you know. So guys, It's not for the faint-hearted, and I'm not saying people need to do that. You know, anyway, that's the end of that one. But all I'll say is that £100 per pip, you know, catching 50 pips, that's a nice day. It's a very, very nice day in the office. They're the days where I'll take everyone out to lunch, you know, and it's nice. However, simply put, how much you're doing per pip times how many pips you caught. Okay, brilliant stuff. All right, so moving on. So lot sizes. Was that okay, Lavinia? Just let me know if that was okay. So lot sizes, have a look at this on the board. So you've got a 1 point, brilliant. So 0.01 is what we call a micro lot. It's a micro lot. That's the equivalent of, ignore the dollars, that's the equivalent of 10 pence per pip. Now, a lot of you I know start off doing micro lots. Okay, micro lots, 10 pence per pip, 0.1. Then we've got mini lot. A mini lot is 0.1. So sorry, apologies. So micro lot is 0.01. There should be a note there. Let me see if I can stick it in. There you go. That's a lot better. That's better. That's better. Okay, right. So 0.01 is a micro lot that is 10 pence or 10 cents per pip. And of course, if you're catching 100 pips, you do the math. It will be 10 pence times 100 pips. And then you've got a mini lot, which is £1 per pip, a mini lot, 0.1. So you can see you're just moving a decimal place. Don't be confused, because sometimes I think I'm doing, you know, I think I'm doing £1 per pip and then end up doing a standard lot because I forget you've got to move the decimal place. So just always double check your lot sizes, guys. Double check, double check, double check. So mini lot, 0.1, £1 per pip. If you're on demo account and you've got a £200 account size, £1 per pip is nice, because then you can easily work out how much money you're going to make, because you're just doing £1 times the, you know, it's easy maths, quick maths. Standard lot, £10 per pip. And that's 1.0. That's a standard lot, £10 per pip. Okay, £10 per pip. Any questions on lot sizes? Lot sizes okay? Happy to move on? Brilliant, brilliant, brilliant. Here is a very nice slide that I'm not going to go into detail now, but it just guides you as to how much you should trade per pip according to your account size. So if you've got £500 in your account, then you can do anything from 0.05 to 0.01, which is from 50p to £1 per pip. Now, some people ignore this and they do, and I did. When I first started trading, I saw that slide and I just ignored it. I had £1,000 in my account and I was doing stupid lot sizes, you know, and I blew my account, you know, more fool me, you know, I didn't listen, you know. But hey, you know, we live and we learn. We live and we learn. But they are recommended lot sizes which you can digest at a later stage. You know, that's quite useful. That's good risk management. Good risk management. We don't want anyone blowing accounts. I've blown enough accounts for everyone, you know, so just don't do that. And have a look at this slide. I think that helps with someone who asked earlier about calculating pips. You can see here, look at this move. This would be nice. Imagine buying here where price was low and then you caught 533 pips. So now I'm going to choose a mathematician. Who am I going to choose? I'm going to choose, I could choose April. See Mark there. Let's choose Galaxy 8 is laughing. Let's see what he's laughing at. Let's see what Galaxy 8 is laughing at.
Yeah, I'm not talking.
No, he's in a conversation. Who can we got? Leo. Emmanuel, the main man himself.
Dev, what is this?
How you doing?
Why are you bullying me?
Because you are an IFA. So if you can't do quick maths, put the calculator down. Right, okay, right. So we are talking about 533 pips. If we're doing £1 a pip, how much we're making?
£533.
If we're doing £10 a pip,
5,333.
If we're doing one of the crazy trades that I do, which is £100 a pip, I've never caught 533 pips. That's a little disclaimer. I've never caught that. I'd love to catch that. But how much would I make if I did?
That'd be 53,300.
That would be a very nice day in the office. But I've never ever caught such pippage. Thank you so much. I appreciate your time.
No problem.
Okay, right. So, guys, we're absolutely getting towards the end now. So, guys, there are 3 types of traders. And some of you will need to kind of work out what kind of trader you are. you have technical analysts. They're people that look at price movement. They look at history. They look at trends. They look at patterns. They look at support and resistance zones. They're called technical analysts. Some people say, some people say they are the best kind of traders. Put a 4 in the chat box if you're a technical analyst. Where are my technical analysts, guys? Technical, yeah, we'll go over leverage. Oh, Mark, technical analyst. Okay, I see you. Sam said 4. I don't know what I mean. Okay, we go 4. Did I say 4? Maybe I said 4. Okay, put whatever number you like. Where are the technical analysts? Dennis, I know you love your technical analysis. Sandra, technical analysis. Technical analysis. Technical analysis. Yeah, I mean, technical analysis is the best. You know, I'm not very good at technical analysis. I'll be honest. I hold my hands up. You know, I'm a good income earner from trading. I make nice money from trading, I have to admit, but I don't do technical analysis, but it is said to be the best. Everyone tells me about it. I've just never been good at it. Bryony, who sits next to me in the office, Travis, they are very good technical analysts, and there's some good people in the team that are good at this, you know, looking at history and stuff like that. And that's how a lot of people make, you know, most of the top traders in the country use technical analysis. So let me be very clear, that is the #1 way. But there's also a group of people called fundamental analysts. That's me. I'm a fundamental trader, okay? I study the economy, social, political influence, the news. That's just where I feel comfortable, you know, trading. And I make very good money from doing so. And I've even managed to convert my colleagues, Bryony and Travis, over to the dark side, and they do a little bit of that with me as well. But, you know, they go hand in hand. So technical analysts, they have to understand fundamentals. If there's, you've heard me type in the chat boxes, in the chat rooms, that we've got major news. That's because that's my heart. My heart's with the news. I know whenever every news trade that's coming out, I know it all. I study it. So I always warn you guys about things like NFP. That's me that types that. Okay. So even technical analysts, they have to be aware of the news. And even myself, you know, I do a little bit of technical analysis. So when I'm about to trade the news, I will look at some candles from beforehand, you know. So they go hand in hand, but you will majorly focus on one. And then you got sentimental traders, and they look at how other traders are reacting to the market. So ask yourself, what kind of trader are you? And then you've got copy and paste people who copy and paste signals. And you know what? There's absolutely no shame in that, because imagine somebody else is doing all of the technical analysis, all of the hard work. They're doing all the stuff that we haven't got time to do, and they're just sending you their signals. That's why I love our signals group. I think we've got the best signals group in the world. And guys, just for your information, I'm constantly looking to improve our signals group. You know, I'm happy to invest whatever it takes, because I don't care. Whatever it costs, I will make sure that you get the best signals. People are always telling me about new signals groups, and if their signals are the best, then I will get it for us, because I want us to win. So if there is a more fire signal service, I will get it for us. I don't mind paying as long as we can all benefit from it. That's my pledge to you guys. Okay, so executing trades. We know market execution. It means that you're going to enter the market straight away. Market execution. You click on new order. You put in your stop loss or take profit. You don't have to. You can just ignore that if you want. Okay, but then you will press buy and sell. You cannot put in a stop loss and take profit. You do have to put in your volume, your lot size, but and you do have to press buy and sell. Market execution means you are placing the order at the current market price. So if you're taking a signal from Trade House and it's like an hour's gone by, then what you need to do is check a chart to see whether that trade is still relevant. If it's not relevant, you may have to just let it go. If it's not market execution, then it's a pending order. This is the second from last slide, guys, so we're almost there. Bear with me. Pending order, okay? Market execution, straight away. Pending order means you're going to place the trade, but it's only going to activate when price gets to your designated point. So we've got 4 types of pending orders. Pending, it means it's waiting. You're going to set up the trade and it's going to activate later when price gets to your point. So first we've got buy stop. Look at the screen because it's got a nice symbol. Look where my cursor is. A buy stop means that you're going to enter the market here, for example. Sorry, a buy stop means that what you want the market to keep rising. So the market's here and you want it to keep rising until it gets to your entry price. So when you enter the trade, you will tell the Metatrader your entry price. So the green bar represents your entry price. So the market is below your entry price and you want it to keep rising until it hits your entry price. Then the trade is going to activate and go live. And then what you want to happen is you want it to keep rising until it gets to your take profit. So a buy stop means enter me when price goes up, 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 hits my price and then keeps rising. And a sell stop is just the opposite. Price is here, price is above your entry point. So you want it to keep falling until it gets to your entry point, it activates, and then it keeps dropping all the way to your take profit. Happy days. You know? And then we have a buy limit. Now, buy limit's a bit funny. It's a funny one, buy limit. Because it's buy, we want the market to go up. We want the market to go up. But before it goes up, we want it to drop first. That's because whoever's analyzed the market has realized that it has to hit a particular zone or a particular area. They want it to hit that area as confirmation that the trade is going to do exactly what it's meant to do. So we want the market's here. The blue circle means where the market is. The market's here, but we want the market to drop first, drop till it hits our zone. Then once it hits our zone, we want it to then bounce and keep rising. So if it just breaks through, then it's dead. It won't be good. You know, but if it sometimes what we don't want to do is activate, mess around, and then keep dropping. And then that's not good. We want it to activate, hit our zone. Okay, it could go down a little bit, but at some point we want it to rise up, drop, hit our zone, and rise. Sell limit is the opposite. We want it to drop eventually, but first we want price to go up, 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 hit our zone, and then drop all the way down. Hit our take profit. Guys, give me a 5 in the chat box if that's okay as an explanation. Or if you want me to go over that again. Brilliant, 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 brilliant. Excellent stuff, guys. Brilliant. Appreciate that. Thank you, Joe. All right, guys. So I'm just gonna. That was the penultimate slide. So that's for IML TV. Man, they couldn't afford me. They couldn't afford me. No, I'm joking. I can't exchange my time for money anymore, unfortunately. Right, okay. Lavinia's question was about leverage. Was it about leverage, Lavinia? I think it was. So leverage is essentially, let me use an analogy because I'm a mortgage broker. You know, when you're buying a house, the house is 300,000. We can't afford 300,000. So what we do is we get a deposit and we leverage the deposit to buy the house. So we've got the deposit and now we're going to the bank and saying, here's my deposit. Can you give me the rest of the money, please, so I can buy the house? And they say, yeah, we'll give you 5 times your income. Yeah, we'll give you 5 times your income. So now you can turn that 50K deposit. You got the rest of the money, the 250, and now you can buy the house. We're leveraging the deposit to buy a house for 300K. We've only got 50K. We want to buy a house that's 300K. So we're going to leverage the deposit to buy the house. In the same way, guys, let me tell you something. Before the internet, me and you couldn't trade. We don't have enough money. Unless we've got any big ballers, and I know Emmanuel's on the call, but apart from Emmanuel, like, we don't have any big ballers. So imagine, in order to trade back in the day, you needed £100,000 just to come to the market. And that's why it was only the rich, big businesses and, you know, big banks that could trade. But leverage, soon as the internet came about, we had online brokers and they gave us leverage. Guys, leverage is beautiful. Do you know how beautiful leverage is? It's the most beautiful thing. So it means that we can now take a small amount of money and the broker makes it bigger for us. So let me use IC Markets. IC Markets, they give us 1 to 500. So for every £1, they will times it by 500. So if I have £100, with IC Markets, I actually have £50,000 to trade with. It's beautiful. Okay, what having big leverage does, it means that I can do bigger lots. It means I can do bigger lots. So let's have a look at this. So now, if I've got an account size of 2,000, I can times it by 500. Now let's do a realistic one. Account size of 200 times by 500. Okay, 100K divided by 10. 200 times by 500. Okay, so it means I can do a 10 lot size. It means I can do a 10 lot size. If I've got with £200 in my account, I can do a 10 lot size. Right? Let's make sure I've got a calculation right. Apologies, I can do a 1 lot size. Apologies, I knew that was wrong. I can do a 1 lot size here, 1 lot size. I just said it before you typed it. I can do a 1 lot size. So with a 2K in my account, with 2,000 in my account, I can do a 10 lot size, which is £100 per pip. But with £200, I can do a 1 lot size. So with £200, I see markets will allow me to do a 1 lot size, which is £10 per pip. So if I can do £10 per pip with £200, let me show you the beauty of leverage. With £200, I can do £10 per pip. So if I catch a move, a 100 pip move, which is not uncommon, a 100 pip move, I've now made £1,000. So with a mere £200, I can make £1,000 a day, hypothetically. That's the power of leverage. That is the power of leverage. Leverage is very, very powerful. In the UK, guys, let me tell you, in the UK, the government have reduced leverage. They've reduced leverage for whatever reason. I believe it's a conspiracy, because what they've said is you can only have big lot sizes and big leverage if you are someone who has money, like I think £100,000 or something like that. You know, they've reduced it in the UK. So if you go with an FCA regulated broker in the UK, the highest leverage you can do is probably about 30. It's rubbish. That's why we have to go to Australian brokers, because they let us do the big leverage. The reason the government gave was because it made people reckless, because big leverage means you can do big lots. So as much as you can win big, you can also lose big. So the government are trying to protect us. That's the official story. All right, guys. So I'm going to end with this. 10 simple rules of trading. Trade on a demo until you have a profitable strategy. Do not trade when you are stressed, emotional, and distracted. Guys, do not do that. Put a 6 in the chat box if you've traded when you've been stressed, emotional, or distracted. It is never, ever good. Don't ever revenge trade. You know, when you've lost and you're like, I'm going to put on a trade to get my money back. Yeah, I can see all those 6s. Oh, man. Guys, I've done it as well. You know, I'll have a fight, you know, with someone, and I'm in an angry state, and I'm like, and I'll trade, and it goes wrong. Stick to one. If you are trading for yourself, not if you're copying and pasting. If you're trading for yourself, stick to one currency pair at the beginning and try and master it. At the beginning, I mastered the pound and the Great British Pound and the Japanese yen. That was my bae. I loved that currency pair. I knew that currency pair intimately. There's nothing you couldn't tell me about it, you know. But now, you know, I do copy and paste, so I'm doing all of them. But if you're trading for yourself, try and stick to one. Don't become a jack of all pairs. Be patient. Be consistent. Rome was not built in a day. Be prepared to lose some trades. As JPR is a sweet, sweet, sweet pair. Guys, I've blown accounts, you know. I've blown demo accounts. I've blown live accounts. You know, I was reckless. It's because I didn't follow these rules. But be prepared. Guys, you're going to take some L's. You know, that's trading. But I've got to a point now where I make a consistent weekly income because I've mastered this skill. No failure is no progress. I've got a new phrase. It's my phrase. No, I'm coining it right now. Some people say, if you can't stand the heat, get out the kitchen. I say, if you can't stand the heat, stay in the kitchen. That's my phrase. Stick to trading on a Tuesday, Wednesday, Thursday. Again, that's for people that are doing their own trades, because the market is better on Tuesday, Wednesday, and Thursday. It's because all of the big traders, they sometimes have long weekends. So they go away Thursday night and they come back, you know, Tuesday. So some of the big trades are done Tuesday, Wednesday, Thursday. But of course, if you're copying and pasting, that's different. Spend 90% of your time studying and 10% executing. And never forget that trading is 90% mental. It's 90% psychological and 10% skill. Guys, thank you so much. Are there any pertinent or burning questions that anyone wants me to go through? Okay, guys, if this has been of some value, can you put a 7 in the chat box for me, please? Just put a 7 in the chat box if this has been of value at all. Guys, I'm aware that this was quite theory based, but I wanted to give you the basics. You know, I wanted to give you the basics. Thank you, guys. I really appreciate that. Thank you so much. Yes, thank you, Joe. So I'm glad Joe said that. So Joe said, can we do another hour? Go, Joe. Honestly, I'm sure people are dying the other end, but I appreciate your enthusiasm and the sentiment. I want to do a hands-on session. So my colleague, Richard Doherty, he's going to do a hands-on Forex basic session. So this is giving you the fundamentals. It's giving you the kind of what goes on behind the scenes, how things work, the theory. But Richard Doherty, he's going to do a hands-on practical session with you guys. Okay, so that'll be during the week where we can look at the markets live and so forth. So more details about Richard's basic trading session, the practical side to this, is coming soon. Guys, I appreciate you guys so much. I'm so grateful to have you in the academy. I'm going to be emotional tomorrow at our event, you know, to think that, you know, this thing started with just me and Bryony and then and Travis, and now it's just grown to 265 people in the academy. Guys, I can't wait to see you tomorrow for our event. It's going to be incredible. Have a great Sunday. Stay blessed. Take care, guys. Thank you so much. Thank you, guys. I appreciate it. Thanks for all the kind words. I really appreciate it, guys. Thank you. Oh, you guys are more than welcome, guys. More than welcome. More than welcome. Thank you, Angelina. I really appreciate that. Thank you. Thank you, Louisa. No problem, Brogan. This has been recorded. It has been recorded. You want to watch it again? No problem, guys. If you're not sick of my voice, feel free to go over it again. Travis, thank you. I feel that's a good compliment coming from you. Thank you so much. I found the pressure. I've got the team watching me as well. No problem, Tosin. You're more than welcome. Felix, yep. Thank you for your contribution as well. Have a great evening, guys. Okay, I'm going to shut this down now. I'm going to end the meeting. Have a good night, guys. I'm going to end the meeting now. Have a great night. Yeah, let's do this. Thank you, Mark. Appreciate that coming from you. Wow, the Lumable man himself. All your marketing needs, Mark is the guy. Holler at him. I'm sure he's going to put his socials in the chat box right now. Website's under construction. I'm just holding off for Mark's. So Mark's. Oh wow, thank you. Yeah, wow. Instagram, my Lumable. If you don't, those of you that like the new logo that come from Mark and his team, powerful guys, very, very powerful guys. I can highly recommend them. Thank you, Brian. I appreciate that. Man, the team's on fire. I'm gonna have to make my way home now from Canary Wolf. Have a good evening, guys. Take care.